Today, a 40-year high for UK inflation and more to come. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and broad news with a distinctively Australian flavour. Well, UK inflation accelerated much more than expected last month to the highest in 40 years, intensifying a squeeze on consumers and adding to pressure for action from the government and the Bank of England. The Consumer Prices Index rose 10.1% in July from a year earlier, after a 9.4% gain the month before, according to the Office of National Statistics. The reading was higher than expected by both the Bank of England and private sector economists. Rising food prices made the biggest contribution to the month's increase, indicating inflationary pressures are spreading beyond energy. Investors moved to price in 2 percentage points of increases in the Bank of England's key rates to 3.75% by May next year. Food prices rose notably, particularly bakery products, dairy, meat and vegetables, which was also reflected in higher takeaway prices, the ONS said. Price rises in other staple items such as pet food, toilet rolls, toothbrushes and deodorants also pushed up inflation in July. Andrew Sentance, a former Bank of England policymaker, said the key rate may need to rise to 3 or 4% because policymakers have fallen behind the curve. Core inflation, which excludes energy, food, alcohol and tobacco, accelerated to 6.2% from a year ago in July, more than the 5.9% reading that economists had expected. The figures add to a cost of living crisis, with wages falling further behind rising prices for goods and services of all kinds. The Bank of England expects inflation to top 13% in October, when the energy price cap resets, and Governor Andrew Bailey has signalled he's prepared to raise interest rates further. But the fact is that inflation probably will be even higher than 13%, and investors are pricing in another 50 basis point hike in the cash rate in September. Contenders seeking to replace Boris Johnson as Prime Minister are promising further aid to those struggling to pay their bills. Chancellor of the Exchequer, Nadhim Zawi, vowed to leave no stone unturned in finding options for the next government to act. We'll be ready for more support as the new Prime Minister comes in, he said during a visit to a school in London on Wednesday. Rising inflation is really putting the squeeze on real wages, even with strong wages growth, said Mike Bell, global market strategist at JP Morgan. And with the increase in energy bills coming in October, it's only set to get worse. So you can see there that UK CPI inflation surged in July amid those rising food prices and helped lift the rate above market expectations. The peak is still likely to come in October, when energy prices are due to be increased again, and we're going to see annual CPI moving a little below 13% at that point. And with inflation now more than 5 times the Bank of England's target, the question isn't whether the central bank will tighten, but it's by how much. In fact, today's reading makes it more likely that the Bank of England will lift by 50 basis points at least in September, compared with the 25 basis points that people had previously thought. Economists are growing increasingly pessimistic about the UK, with the risk of a recession now seen as far more likely than not due to these rising cost pressures. The Bank of England expects a recession to start in the fourth quarter and lasting until the early part of 2024. And the central bank expects inflation to surpass 13% later this year when those energy bills come again. That would mark the worst reading since September 1980, when Margaret Thatcher's government struggled to bring wage price spirals under control. Separate figures showed that pipeline price pressures appeared to be easing, though, with fuel and raw material prices rising just 0.1% in July. That's the smallest monthly increase since December. That was mainly due to a drop in crude oil prices, though, during the month, and it still left input prices up 22.6% on the year, only slightly below the record pace recorded in June. Output prices rose 1.6% on the month, and by 17.1% from a year earlier. That's the largest annual gain since 1977. In fact, UK manufacturers are raising prices in an effort to protect their margins. The cost of both raw materials and goods leaving factories continue to rise, driven by the price of metals and food respectively. Another measure of inflation used to set rail fares and payouts on index-linked government bonds registered the strongest jump since 1981. The retail price index increase was 12.3% from a year ago, up from 11.9% the month before. Now, Andrew Bailey, the Governor of the Bank of England, blamed Russia for choking off supplies of natural gas, causing the cost of energy across Europe to rise, and for the jump in inflation. Gas futures embedded in the Bank of England's forecast this month almost double their level in May, and they've risen further in the past week. Energy, food and motor fuel accounts for much of the inflation surge, but those increases are feeding through into the costs of goods and services, prompting people across the country to demand higher wages. Railway workers plan another round of strikes this week, with teachers, barristers and nurses also considering action of their own. Real wages adjusted for inflation actually fell 3% in the 3 months through to June. That's the sharpest pace since records began in 2021, according to official data from Tuesday. Unemployment increased by 160,000 in the second quarter. That's 46% less than the 3 months through to May. And job vacancies fell for the first time since August 2020. So the cost of living crisis is now very real for both households and businesses. So there does need to be some concrete way forward to support vulnerable groups with high energy bills, said Apesh Pajela, head economist at the Confederation of British Industry. And the Consumer Price Index, including owner-occupiers' housing costs, the CPIH, rose by 8.8% in the 12 months to July 2022, up from 8.2% in June. And the annual rate, though, was below the 1.2% from April 2020 at the start of the first coronavirus lockdown to March 2021. The rate has also risen markedly since then, and the July 2022 figure is the highest recorded annual inflation rate in the National Statistics Series, which began in January 2006. The rate was last higher in the constructed historical estimates back in December 1990, when it stood at 9.2%. The largest contribution to the annual rate in July 2022 are from housing and household services, transport and food and non-alcoholic beverages. Of course, CPI inflation, the basis of the Bank of England's target, surged to the 40-year high of 10.1%. And that was fed by an increase in food and energy prices, because, of course, they exclude the cost of housing. And the Bank of England expects the squeeze on consumers, along with other higher interest rates, to push the economy into recession this year. And it's worth noting that Britain's low-income households are being hurt the most by these soaring prices, according again to official findings that will add to pressure on the government to act. The figures highlight how a cost of living crisis is hitting British consumers unevenly, delivering a heavier blow to those who can least afford it and widening the gap between the rich and the poor. The figures show that the experience of CPIH inflation for the second poorest 10% of households and the second richest, that measure of price growth accelerated to 8.8% in July from 8.2% in June. Lower income families spend a larger proportion of their resources on energy, food and drink, which have driven inflation higher. And those who received subsidies for rent were among the hardest hit, according to the ONS. The gap between that group and those who own their houses was the widest since records began in 2006. And a report yesterday showed that wages adjusted for inflation are falling at their fastest pace on record, according to the Resolution Foundation, and they expect low-income households will have to cut back on non-essential spending by 25% to cope with energy bills likely to top £4,000 a year starting in January. There is no escaping this cost of living crisis, said James Smith, research director at the think tank. It will take many months and much more living standards pain before inflation starts to ease. And Stuart Rose, a member of the House of Lords and chairman of the supermarket chain Asda, said that inflation is pernicious. It erodes wealth. I want to look after those people who cannot afford to take the hit, and we know who they are. So a couple of interesting observations here. The first is, inflation is very high but will go higher, and it's percolating into other sectors of the economy and becoming embedded. It's going to be tough to control. The second is, I think it's significant that they do report inflation including housing as one metric. Now, we don't do that in Australia. Housing is only proxied through rental here. And I think there's a very important question as to whether we should be reporting inflation including housing. That would change the perspective. The third point to make is this unequal distribution of the pressure on households. Those who are less able to cope with the stresses and strains of rising prices are the very people being caught out. And we're seeing that similar trend in our mortgage stress data here in Australia, where a lot of people, again, who are in the lower quartiles of income are actually those who are highest stressed even now. And it will get worse as inflation continues to grind higher. And in the UK, they are suggesting maybe the trend in inflation is beginning to slow, but that trend is pretty anemic, frankly, and those input prices are still to filter through more broadly, which once again shows how embedded inflation is across the economy there. And I think you can read across to the economy here, and I still expect inflation to be strong and putting significant pressure on households here in Australia over the next few months. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.